The new tax law limits to $10,000 the amount that taxpayers can deduct for state and local income and property taxes they paid. The new provision takes effect January 1. So taxpayers in several high tax states like New Jersey, Illinois, California have rushed to their town halls this week to prepay 2018 real estate taxes that have already been assessed. Doing so, according to an IRS ruling late today, will let them deduct the full amount on their 2017 return in most cases. Here to explain who can and who should and how is Johanna Seenath, Senior Tax Manager at PagnatoKarp. Johanna, welcome
Hello.
back. Good to have you with us. Let's go carefully here because it gets technical very quickly. Who should try to do this and who shouldn't?
So first of all, the IRS released guidance today surrounding who can deduct property taxes, and the most important thing to know is that if your 2018 property taxes have already been assessed prior to your year end, you are allowed to prepay and deduct those taxes. So if you unfortunately do not yet know what your 2018 property taxes are, you will not get a deduction on your 2017 return.
So how do you do it? Do you go to your town hall and ask whether there is a bill ready for me, and should I do it no matter what, or should I do it only if my property taxes would be so great that I wouldn't be claiming this new expanded standard deduction?
Absolutely. So the first thing I would look at is if you are going to be in the alternative minimum tax, or AMT, in 2017. And if you are going to be in AMT, unfortunately, you're not going to get a benefit for paying any property taxes, so I wouldn't pay them in that scenario. If you will get a benefit, the best thing to do is contact your county and see how you can make that early payment prior to the end of the year.
And then obviously get a receipt for the amount you did pay, and then that can be your proof that you did prepay.
Absolutely.
I would think that another wrinkle here, many people have their property taxes escrowed in advance by their mortgage processor or mortgage lender. I would think that you then have to go to that entity and say, hey, I already paid, stop escrowing.
Exactly. You're going to have to contact your bank if your mortgage does escrow your property taxes, and figure out with your specific bank how to get that escrow refunded for your prepayment.
Sounds like several gnarly steps here, Johanna, but,
yes.
But ultimately you could end up saving a lot of money this way, couldn't you?
Absolutely. So in 2018, the state, local, and property tax deduction is going to be added together and capped at $10,000. So if you do have the ability to prepay, it's going to save a lot of money on your 2017 return.
Yeah.
So I think it would be worth giving your bank a call and seeing how you can work that out.
I've often seen it said that if you can, you should prepay January's mortgage payment, because then you will be able to claim the interest if you itemize. True?
Yes. So if you have a mortgage payment where you're paying principal and interest for your mortgage, and usually your payment is due on the 1st of the month, if you want to pay that a couple days earlier, I would just make sure with your bank that that mortgage interest that you pay will be deductible on your 2017 return as well.
All right, the tax world is a-changing, and you're going to be a busy
Very
person.
much.
Johanna Seenath.
Oh, yes.
with PagnatoKarp. Lots
Thank
of
you
late
so
nights,
much,
I'm
Tyler.
sure.
Thank you.